Okay, we're going to go through how we can call the absolute tops for Bitcoin. And I don't just mean like a top, I mean the absolute top before the bear market begins and we go into like a multi-year downtrend, for example. So we're going to go through step by step the rules that I use to help call a top and help me generate over 40 Bitcoin just by following these rules in combination to short-term trading. But honestly, if you are a new investor or a new trader and this is the only like crypto video you ever watched, I promise you'll become a much better investor just by following these rules, because it's using on-chain data to determine your entries, which basically allows you to see what's going on in the background behind all the investors. What are all the investors doing? Are they holding at an extreme profit? Are they holding at a loss? Where did they accumulate? Stuff like that, right? So if you combine these three simple rules together, one of them's not so simple, but I'll be teaching that in the video too. If you combine these rules together, you're going to be able to call the tops, so you're not stuck buying the tops and then holding it through the bear market. That's this repeat story that I hear all the time from new investors. And this video is also going to help you basically use the same rules to determine the bottoms. But the primary goal, because we are about halfway through this bull market, the primary goal is to help teach you when the top is going to go in, so you don't end up buying the top and you actually use these rules to sell it at the appropriate time. And even if after this video you struggle with trying to follow these rules, I just want to let you know that if you subscribe to me, that'd be pretty awesome. But if you subscribe to me, I will be telling you guys when I'm selling all of my Bitcoin, okay? And when I rebuy, of course, as well. But let's dive into it. I'm going to share my screen, and we're going to go through this together. So here is the Bitcoin chart. This is Bitstamp's chart. And the reason why I chose Bitstamp is because it has all of the history, so we can go through each time these rules have been met, so you can get an idea of what kind of conditioning you should be looking for, okay? So today, let's go over to the first rule. The first rule is the relative unrealized profits and loss chart. So this chart, what it does, it's connected through BTC Scan through an API to help basically accumulate data to find out how much people are in a profit or in a loss. So if you see right here, there's this green box zone and this red box zone, and there's this number scale between 0 and 3 on the right-hand side. When we're below the 0 level, this is known as the opportunity zone, where this is honestly the best time to ever prepare to buy Bitcoin, okay? And then we have the overheated zone, which is the exact opposite. This is telling us that a large amount of people are in a profit, and what happens when a massive amount of people are in a profit? They tend to sell. Or when the first big seller kicks in, then everyone starts to follow suit and sell along with them. And that's what creates the bear market. So we are and today's date is September 16th. We're about halfway through the bull market right now based on the conditions that we've been dealing with. So one thing you should learn about this chart is that consolidation creates resets in the market, which basically tells us a story that when we consolidate, people are selling and then people are buying it back up. And like right now, the on-chain tools have actually told me what's going on. It is that basically retail, little fish like us, are selling all the time, and institutions are buying everything that we're selling. And there's proof of that on this website as well. So if you go to Chain Exposed and you scroll down to address balances, you can see, for example, this is the Sharks wallet. And this is not to do with the rules, by the way. But you can see the Sharks wallet here has been scaling like crazy. These are people that are holding between 100 and 1,000 Bitcoin, right? But if you look at like the fish, for example, people that are holding between 10 and 100, this has been on a downtrend, right? So sharks in an uptrend, fish in a downtrend. We got the crabs, which are people holding between 1 and 10. They've been in a downtrend ever since November as well, ever since Bitcoin's hit around 100K, which is a big psychological level. So it makes a lot of sense for people wanting to take some profits around here. But they've been going in a downtrend too. Shrimp as well. They've been going in a downtrend ever since November, around 100K. So retail have been selling to institutions, and that have been creating a reset from all the consolidation that we're getting, and it's kind of like extending our bull market in terms of time. It's taking longer for us to get overheated. So when retail starts stepping back in again, that's when you'll start seeing the froth of the mouth crazy green candles, and we start to establish our top very shortly after that. But yeah, so we went through rule number 1 is we need to see the relative unrealized profits and loss chart right here be in the overheated zone, like a 2.35 level. One thing I do want to let you know about with Chain Exposed is that they've been lately have been really slow at rendering their data. Like the last time we got an update of where we're at on this chart was August 20th. And normally it takes 3 to 7 days for this chart to render. And if we're only 3 to 7 days late, not a big deal. But being a month, almost a month late, because like right now it's September 16th. Being a month late is kind of a big deal. You can miss out on calling the top with this tool. So if you decide that you want to subscribe, I will be calling the top for you guys using a different tool. This one's about $100 a month. And if you don't want to cover that, then yeah, that's why I'd recommend maybe subscribing, because I'll be telling you guys when I'll be selling all of my Bitcoin when all these rules are met. And I get the data almost real time. Every hour, this version updates. But if you'd rather pay $100 than subscribe to me, then we have Glassnode Studio is a good option too. It's just, yeah, it has a lot of really cool tools. But yeah, it updates a lot faster, except how it expresses the data is a little bit different. It talks, rather than the overheated zone, we have what's called like the euphoria and greed stage. And rather than the opportunity zone, it calls it capitulation. So it's the state when a large amount of people are holding at a loss, basically. So the red zone here, capitulation, blue zone up here, euphoria, greed, okay? And yeah, this one still works perfectly. It calls the top. And what's even better about this one is it shows you the entire history and not just like the last couple of cycles. All right, cool. So rule number 1, be in the overheated zone, okay? On the Chain Exposed or in the euphoria stage on Glassnode. Next rule, very, very simple, and it correlates with this chart. It's basically how much is the supply in the profit or in a loss. You can find this out on Chain Exposed as well. So if you click on supply in profit and loss, we can see, like, for example, right now from the last updated price of 112K, Bitcoin was like 91.79% of the supply was in a profit, and like 8.20% of the supply was being held at a loss. Now, how you call the bottom with this, basically what you want to see is this chart being below, like, oh, you want more than 50% of the supply being held in a loss, right? When we're there, every single time we're there, we've called perfect bottoms, okay? And if we go to Glassnode version over here, percentage of the supply and the profit and loss, it looks pretty similar. It's showing us right now that there's about 93% supply is in a profit at $15,399. So this one updates a lot faster, so you can get that data a lot quicker. But yeah, it does come with a bigger fee. So basically, rule number 1, you want to be in the overheated zone, and then in the REPL chart. And then rule number 2, you want the supply and the profit and loss to be above 90%, right? That's how you would call the top. And when it comes to the bottom, you want below 50%, like 50% of the supply being held at a loss, basically, or more. Okay, that's the 2 rules. And now the final rule, this one comes with a little bit of a learning curve. So I'm going to give you guys a little bit of a lesson here, because like when all those rules are met, this is an example of when all those rules are met right here. All the rules were met right here. And if you zoom out a little further, right here, and so on and so forth, right? Now, the last rule is based on market structure. You want to wait for a daily bearish change of character. And if you don't know what I just said, I understand, especially if you're a new trader. I'm going to go through a little bit of a mini lesson here for you guys on market structure. So when you're in an uptrend and price action comes up and you have a 2-candle pullback, which is very important. You need to have 2 consecutive candles in a pullback, and you'll generate what's called an unclaimed high or a weak high, okay? And when we come up and we break that level, we have what's called a break of structure, and we generate what's called a strong low, right? So weak high and strong low. And this is wick to wick, by the way. If you're looking at a candle, the anatomy of a candle, and this is the body, this is the wick, this is the wick here. So you need to break above that wick in order for it to be considered a break of structure, and it needs to be a full body candle. Otherwise, it's called a SFP or swing failure pattern. Okay, now let's go through this a little bit more. So we come up, weak high created when we pull back, break of structure, continuation up, pull back at least 2 candles again, come up, break of structure, continue, pull back at least 2 candles, and then we come up, get another break of structure, and we generate this as our strong low. When we come up and we break our strong low, we have what's called a change of character. A change of character, think of this as one of the most popular rules that traders use to determine when a trend is about to reverse, right? Now, not every change of character is equal. So don't just take this lesson and take every change of character as a reversal trade. You'll need to add what's called confluences to your trading strategy to determine what is a good change of character. For example, the confluences that we're talking about is the on-chain data confluences, right? And we're determining this on the daily time frame. So when a daily candle breaks and gives us a change of character in combination to supply being above 90% in profits and us being in the overheated zone on the relative unrealized profits and loss chart, this change of character becomes much, much more important, right? Because I can go through the charts and I can show you a whole bunch of daily bearish change of characters and they have not called the top, okay? So it's very important for those 2 rules to be met first before just looking at a daily bearish change of character and determining that as the top. Okay, so we got that change of character. We then generate a new strong high instead of a weak high, right? And we come down, we pull back at least 2 candles, then we come back down, get a break of structure, new strong high, then we have a weak low here, right? And we break that low, come down, pull back at least 2 candles, generating a weak low or unclaimed low, right? Come back up, break a structure, and then eventually we come back up and we get our bullish change of character. Now, we did talk about a little bit on the calling the bottoms and stuff like that, and I do use these rules as well for helping me call the absolute bottoms in preparation for the bull market. A lot of people would scream bull markets at very different times. When I bought Bitcoin, it was at 16.9K, okay, for this cycle. And that's when I determined that it was the bull market. Everyone else didn't consider it like a bull market until there was ETFs and stuff like that at like 40-some thousand dollars. So these rules will get you in relatively early. You're not going to get the exact bottoms, right? Because if you look at this structure that we're drawing right here, you can see that we have to come down to establish like a strong high that needs to be broken in order for us to get us that change of character. Same here. We need to come down a bit first to determine all of our rules being met. So you're not going to get the tippy top of the market. And if you do, call me and teach me what your rules are, because these ones have been making me a lot of great money. But yeah, there's always more to learn in this space. So this is a This is a basic rundown of market structure. If you want to learn more about market structure, I do have a whole course on this exact strategy, and it includes market structure, how to manage your risk, and that's actually something that we should talk about with this when we're trying to call the top, how we should manage our risk on it. If you decide to do like a futures trade rather than just selling your Bitcoin, if you not have any Bitcoin, you can use this for futures short. But let's talk about that. So if you're going to jump into a futures short, let's see. And for those of you who don't know what a short is, basically it is like you're making money as the asset's going down. You're buying a contract and you're basically risking your funds as collateral for the setup, okay? So the drawdown risk on daily structure is pretty big, okay? Like when we had our bearish change of character to call the top, it happened. See how we come up, pull back at least 2 candles, created a weak low, strong low here, right? We come back up here, got that break of structure, come up a little further, another break of structure, and then finally we have our bearish change of character when we break this low right here. Okay, this is the moment that you could have called the top using all the rules. Let's go back to chain exposed, right? And let's validate this together. So here, this was in February 2021, where we were in the overheated zone, okay? Let's go back to that chart. Where was I? Right here. Okay, so this is, if you look down here on this little marker down here, you can see that it was like February bleeding into March when we were in the overheated zone, and all we needed to wait for was that bearish change of character. Now, I will be honest with you, I just learned these rules around the time Bitcoin was worth around $9,000, $8,000. It was during this consolidative range right here. And I was a new trader, in my opinion. I just started around here, like 2019, sorry. And so I wasn't fully married to the strategy just yet. So I let my emotions hold through all of this. And I got very, very, very lucky. And I was given a second chance over here. And I ended up selling around here. So I got the opportunity to sell for about $5,000 more than when all the rules were met. Bitcoin very, very, very rarely gives you a second chance when the top is called. And I think this is the only time in history that has ever done that when it comes to calling the tops. So you can't bank on that happening again. So when all the rules are met, I'll commit definitely this time for the top, and I'll be selling all when all my rules are met. I'll be selling it, and I'll let you guys all know. But yeah, let's go back to the risk management. So if we entered a short, let's say on this candle was the candle that we got the break of structure, the change of character right here. It's on this candle right here, right? This candle did not count because it was a wick. We need to have the body close. But anyways, we have, let's say we entered a short here. Your stop loss will be way up here because you want to use the strong high as your stop loss guard. Now, if you're just trading spot and you're holding the asset, this is where you just sell. You wouldn't need to worry about setting up a stop loss unless you wanted to put like a rebuy position here in case you feel like you might be wrong, okay? And then you hold this short position until you have an opposing change of character on the daily or when all the other rules are met for the over here. Now, if you jumped in a short in this scenario and you held until all the other rules were met, you might have actually gotten stopped out when we came back up through here. But the primary objective is to hold as long as you possibly can on your short position until all the opposing rules are met for longs, which would be way down here. And what's kind of nice about holding a short in a bear market, even any market, honestly, most of the time we have what's called funding rate fees charge your account every day, right? When you're holding a trade position. Those funding rate fees are a pain in the butt for people who are in long positions because they're normally positive. The fees are normally positive. And when they're positive, the people who are in longs are paying the people who are in shorts, right? I know it sounds weird. But if you're holding a short position, you can actually earn passive income even during a bear market because majority of the time, the funding rate fees are almost always positive. When they're negative, it normally is used as a really cool indication that things are about to reverse really aggressively. So you can add that to part of your rules too if you want to use like funding rate fees as a part of your rules for potential swing trading. But yeah, if you're holding a short position, it's basically passive income while you're waiting for you to close a position that will also make you income. So it's kind of nice. This other example over here, we had a double top. We had, let's follow the price action a bit. So we come up, we pull back 2 candles at least, giving us a strong low. We got that higher high right here. And then we came up, and then we had our bearish change of character right here. And we were fortunate enough, if you wanted to wait for a pullback, which is very common, by the way, for a pullback to occur right after a bearish change of character or a bullish change of character, you'll see it kind of come up against you sometimes. And you can use that information to say, okay, cool, this is the invalidation point. Let's try to get in between the confirmation and the invalidation point to get better risk to reward ratio. Sorry for the cough there. All right. So let's go back in time. This is this is December 2017. We go to the chain exposed chart here. We can see December 2017 was the last time we had that peak, so that rule was met. We know that the supply was over 50% in the over 90% in the profits. In fact, at that time, over 100% of the supply was in the profit. Not over, sorry, not possible. But let's go back over here, and we can see, yeah, we had that bearish change of character at that time right here. So you can use this as your stop loss if you're entering a futures position, or a rebuy if you're in a spot trader thinking that you don't want to give up your Bitcoin, but you definitely don't want to hold it through this downtrend. But yeah, this is the other time here. This is back in December 2017 where all the rules were met. Going back in time a little further, we had a double top scenario here. Now, Bitcoin was super young at this time. This is when it was worth $1,000. And all the rules did meet except for the bearish change of character. We did have a failure to create a higher high and a double top, which by itself is bearish, but we didn't have, like, at least not on this chart, an actual formal bearish change of character because we didn't really have a proper healthy pullback until way down here. So when you have that much of a distance away from a bearish change of character, which by the way will likely never happen for Bitcoin ever again, like to have that much percentage difference between a proper pullback and the top, that doesn't happen anymore, unfortunately. That's 500%. But anyways, yeah, the double top scenario is a scenario that we could prepare for, but it's not something that's likely going to happen where we didn't get like a local area with a proper pullback before, so we can establish like a proper bearish change of character. But yeah, all the rules were met there except for that one change of character rule. Structurally, it was still bearish. Whenever you see a double top or an M pattern like this, these are warning signs that price action is likely going to start going to the downside. Same with double bottoms like this. These are warning signs of a reversal as well. These are called your neckline, right? And when neckline breaks, you take the momentum like this from the resistance or the support to the neckline, you click and you drag, and then you have a measurable target where price action is likely going to head, right? However, there are rules you can couple with this that will allow you to anticipate continuations like value area data and stuff like that. But that's a whole other video. Anyways, that is, guys, how you call the absolute tops. Now, the kind of leverage you'd use if you're entering a short is going to be determined by the drawdown. We're likely going to see like a maximum of maybe $5,000 to $10,000 gap before we have our bearish change character, and I'm likely going to suggest like a leverage point of like maybe 5x leverage just to be safe. If you can reach out to me in the Discord, I got a link down below where you can join the Discord, and that's an area where you can ask me the questions when the time comes where all these rules are met, like what kind of leverage you think you should use. And when we call the top, I'll make a video about it, of course. And in that video, I'll be telling you what kind of leverage I'm using. I'm planning on shorting with $100,000 and risking to lose $5,000 of that, which is more than the average person risks to lose in a trade. Like that's 5%. I normally recommend risking to lose 1% when your stop loss is hit. Let's say, for example, you're trading with $1,000. Majority of the time, I'd recommend to people that they should be risking to lose like $10 in each of their trades out of that 1,000 so they can scale with a trading strategy that provides them a risk to reward ratio of a 1 to 2 or greater. So when you're risking to lose at $10, you're trying to gain $20 or more. It's going to be the same kind of scenario, but because we're doing a swing trade setup, I'm going to be risking to lose more. Every time I've done these setups, I did risk to lose more than I normally advise people. Just being straight up honest with you, like when I did this double bottom here, I was trading with at the time like 10 Bitcoin, and I was able to use these rules to turn it into 40 when I sold. I sold it early because the funding rate fees were insane for people in long positions. But I was able to turn that 10 BTC into 40 in that one setup. And I risked to lose, though, like 6%, because by the time we got the change character, the bullish change character that I was looking for, which was, I kind of front run a little bit here. My stop loss guard was way down here, and that percentage wise was pretty big, like 6%, yeah. And I was risking to lose about 6% of my capital too. And but yeah, all right, cool. I'm just ranting now. I'll see you guys in the next video. I'm live usually at 11 o'clock on YouTube. Sometimes the schedule does change, but yeah, you can follow me, subscribe, share to your friends, to anyone who might be struggling on how to call the top for Bitcoin, and this will help them walk them through it. And you're always welcome to message me on Discord. I do just recommend just being very, very cautious. I have my handle in the description down below, but the problem is there's impersonators. So I will never, ever, ever ask you for money. So yeah, don't put your funds on a shady exchange if an impersonator is trying to steal your stuff, okay? All right, guys, I'll see you in the next video. Thanks for watching.